Welcome to Wall Street Week, the show of record for long-term investing. I'm Gary Kaminsky.
And I'm Maria Bartiromo. Thanks for being here. The market's hitting new highs to start the week. Janet Yellen's rate hike, though, slowed things down a bit in terms of the rally. The Dow not quite making it to that historical 20,000 level.
Regardless, the street thinks we're entering a new phase with a pro-business White House, but it also comes with a likely scenario where Fed will keep raising interest rates regularly. We're joined today by the outgoing CEO of the Nasdaq, Bob Greifeld.
Glad to be here.
So, Bob, it was a historic week because the Fed has raised rates again for the second time. Did you believe it's only the second time in 10 years?
Incredible.
What did you think about what the Fed did?
It wasn't surprising, certainly expected, and I think it's interesting that we see now the prediction as well, 3 rate rises in 2017. So to me, that's the more important fact.
But I think it's also important to remember that a year ago, when they raised rates for the first time, I think they thought at that time there might be 4 raises in 2016. So I think investors have to, continue to take that with a grain of salt, so to speak.
Yeah. All predictions don't always come true.
Bob, look, you're looking obviously at market structure, at volumes. But I want to get your take on what we've seen in terms of this rally. I mean, yeah, sure, we had a little bit of a slowdown this week, but we're talking about record high after record high since Trump was elected. How do you see it?
Well, it was amazing to me on election night how the market quickly got to the essence of the situation, right? So every prediction said if Trump won, the markets would go down. And that was the case for about an hour or so, right, where the futures are indicating down 600 or 800 points. Then the markets, as the markets do, the wisdom of the crowd said, wait a minute. We just elected a pro-business president. Forget about everything else, right, which you might have different opinions on. We elected a pro-business president who's going to then enact policies. And the fact that the Republicans maintained and increased control of the Senate and the House then added to that. So right now, the market is factoring in policies being passed that will be pro-business. Now, we have to get those policies passed.
Yeah, but is it ahead of itself? Is it ahead of itself? I mean, I understand we're expecting, earnings to get a boost because of this rollback in regulation and corporate tax rate of 15%. But has the Trump rally, has it begun to lose steam?
Well, I think the first question, is it ahead of itself? One, the deregulatory effort has not yet happened, nor has Congress or the president signed anything. So you have to say, okay, we're ahead of that. But the question then is, what is the probability of these actions happening? So I think, though, that's what's being released of the animal spirits. And you see, and I see more business people than just about anybody, people are feeling good, they're engaged, and they're going to be more aggressive in terms of their pursuit of the business plans.
I do have to just say one thing. Bob pointed out that all the strategists were calling for a market crash that night. My dear friend over here, I think it was around 11:30 or so on the Fox News network, when the futures were showing down 800, said, I see this as a tremendous buying opportunity. So we got to give Maria props on that. That was a great market call.
That was a good call.
No, it's true, because also I saw it as a growth plan. I thought it was going to boost earnings. And then when you saw the Republican sweep, not only is it a growth plan, but it's going to actually happen. It'll get through. It
will get through.
Bob, I have to ask you about the Dow 20,000 number, only because it reminds me of something that I know you're very familiar with, which was the Nasdaq 5,000 in 1999.
Oh, right.
Now, for professional investors, these numbers don't really mean much.
No.
But do you get concerned that there's going to be hype associated with this that might create some short-term fluctuations that aren't good for a long-term investor?
I'd have to agree with that. But the state of the markets are the fact of the moment they can be quite inefficient, but over time they're very efficient. So when you have a positive sentiment environment, I think generally the markets will tend to get a little ahead of itself. It doesn't matter anything for the long-term investor that you're talking to over time, because it will correct and get to the right point in time. But we clearly have had a month where it's been nothing but positive news, and the world doesn't work like that. So there'll be some setbacks as we move.
I just want to follow up one thing about what's happened since the election. You see the buying and selling every day on the Nasdaq. Are you seeing really what I would deem as like sort of healthy, vanilla institutional buying? There's been some skepticism that a lot of this is the machine still. Do you see real institutional buying since the election?
Well, it's important to clarify. the traditional long investors use computers to drive their buying strategy.
Right.
So from that point of view, we don't really know because everything comes in an automated fashion. The old mythology of somebody getting on the phone and saying buy 1 million shares of that, that's gone. Right? We have an automated marketplace that exists today. So I don't have any direct insight there. But certainly you see enthusiasm on the CEO, the business side about their prospects. It has to show through in earnings in 2017. So I think in a certain respect, the markets are assuming that we will have some fairly strong or robust earnings growth as we go into 17 and into 18.
And in fact, J.P. Morgan's analyst Anthony Chan said that a decline in the corporate tax rate from 35% to 15% equates to an increase in earnings for the S&P 500 of 20%.
Yes.
And you just said a minute ago that you speak to more people than anybody out there in terms of business leaders, and I know that you do. Do you expect that there's going to be an unleashing of activity once taxes come down, once regulations are rolled back? What are they going to do with the money?
I think it's impossible to overstate the advantages the U.S. economy will have if we have a competitive global corporate tax rate. We've spent the last decade or so thinking about how we can operate in a lower tax environment. And if we can stop that thinking and make sure, one, we bring money back, but two, invest in the U.S., that's a wonderful thing. And I don't know if 20% is the right number, but it's a large number that we can then deploy, I think, in a productive way, expecting a return on that invested capital. So we're excited about it.
You know, you mentioned animal spirits. We hear about it every single day.
Right.
How does the animal spirits actually, though, start to impact the overall economy? How does the feeling good start to actually show in the GDP numbers, which is also going to be very important for the market to stay at these levels?
Yeah, and that's kind of what I'm saying. I mean, it has to be represented in actual performance. So it starts by corporate management, business leaders, small business, large business, saying, I'm feeling good, I'm willing to make that investment.
Hiring people, building new factories,
exactly.
and spending money in R&D.
All those decisions are discretionary.
Yep.
Right? And the fact that you can say, I feel good, I want to make that positive decision. You're seeing that happening, and I think, you know, the Trump election has released that, and we should, at this point, feel pretty good about it.